Good morning, everybody. Shane Anderson here from the Brookings home team, powered by Century 21. Still coming you from my man cave, so to speak, here, and got Mr. Justin Froiland over here at Fairway Mortgage, not coming from your office, but a location where we're kind of used to right now, our homes. So,
Right.
so this is two times in 2 weeks here, Justin. Thanks for jumping on here. I know last week was not your scheduled time, but this week is, and you were gracious enough to jump on twice now and during this time frame. So thank you for doing that. Wanted to, we were talking before we jumped on here, and the last day or two, kind of what we wanted to talk about, and with today's situation and people maybe having some tough times. Being able to pay their mortgage and stuff, there's a lot of lenders out there offering what they call a forbearance program. Am I saying that right? Forbearance?
Forbearance.
Forbearance, yes. So forbearance, I've heard it enough times you think I'd remember that. But forbearance program, and I asked Justin to kind of jump on here and give his opinion, maybe some ideas and stuff on if you are in this type of situation. Maybe some ideas to help you with that. What it all basically boils down to, guys, is you just got to check with your lender and see what's available. But this is just kind of a high level explanation of forbearance and kind of how that works in this time that we need. So, Justin, I'll stop talking, but thank you again for jumping on. And
Yeah, no problem. Thanks for having me again, Shannon. And yeah, I think the topic of the forbearance is definitely a good one to go over right now. Like you said, with everything that's going on. And so I want to just kind of explain what a forbearance is so everybody understands that. And notice I said forbearance and not freebearance because there's a somewhat of a misconception out there about that. And so I think the easiest way is to just give you an example. So let's say your mortgage payment's $1,000 a month. And let's say you lose your job or are affected by this COVID-19 to the point where you could potentially take advantage of this forbearance that your servicer, the person who you're making your mortgage payment to, is offering. They're offering potentially up to a six-month forbearance. And so let's say your mortgage payment's $1,000 a month, and you go and you take advantage of that full six months of not having to make your mortgage payment. Well, then come month 7, your servicer is going to expect you to pay the $6,000 that you owe them from the back payments plus that new mortgage payment. So they're going to expect you to write a check for $7,000 potentially. Most people probably not able to do that, especially after you're coming off and not working for 6 months. And so, so you can see where that's kind of going. The other option that a lot of servicers will probably do out there at that point is give you a different option where they say, okay, well, we'll have to pay this all at once, but we're going to split this up and increase your monthly payment by $500 for the next 12 months to repay back that backed amount. Well, more than likely, you probably can't afford that extra $500 a month either, because you're just, again, coming off of not working. And so then a lot of times the third option that they'll resort to is what's called a loan modification. Again, not an ideal situation for the client and for the borrower, because that is something that will potentially negatively impact your credit. There may be some fees associated with it that lender will charge to modify the terms of that loan and